All right, let's talk about something big. Bitcoin. We've all seen the crazy headlines, the ups and downs. But what if I told you that the common prediction for Bitcoin hitting $150,000 by 2026 isn't just a hopeful guess anymore? What if it's actually the new bare minimum? Today, we're diving deep into why that 150K figure, which once seemed like a wild dream, is now looking like the starting line for what's to come. Forget the hype for a second, and let's look at the solid reasons why this is not just possible, but probable. We're going to break down the key drivers, from massive institutional adoption to game-changing macroeconomic shifts that are fundamentally reshaping Bitcoin's value proposition. This isn't your typical crypto bro speculation. We're talking about real, tangible evidence that suggests the next couple of years could be monumental for the king of crypto. So grab a drink, get comfortable, because you're going to want to hear this. First up, let's tackle the elephant in the room, the Bitcoin ETFs. The approval of spot Bitcoin ETFs in the United States wasn't just another news story. It was a seismic event. Think about it. For years, the only way for most people and institutions to get exposure to Bitcoin was through crypto exchanges, which felt like the Wild West for many. But now, major financial giants like BlackRock and Fidelity are in the game. They've essentially built a secure, regulated bridge connecting the massive world of traditional finance directly to Bitcoin. This is huge. We're talking about trillions of dollars in wealth managed by retirement funds, pension plans, and investment advisors that can now flow into Bitcoin with the click of a button. The initial inflows we saw were just the beginning. It takes time for these huge financial ships to turn, but they are turning. As more financial advisors get comfortable and start recommending even a small 1% allocation to Bitcoin for their clients, the demand will be astronomical. We're not talking about retail FOMO anymore. This is a steady, powerful, and relentless wave of institutional capital. And this wave doesn't just buy and sell on whims. It buys and holds, locking up supply and creating a solid price floor. Next, let's talk about the halving. If you've been around crypto, you know this word. But let's clarify why the 2024 halving is different. Every 4 years, the reward for mining new Bitcoin gets cut in half. Simple supply and demand, right? Fewer new coins being created means the existing ones become more scarce and therefore more valuable. Historically, every single halving event has been followed by a massive bull run. But this time, it's a double whammy. For the first time ever, we have the halving happening right as this massive institutional demand from ETFs is ramping up. So, you have a situation where the new supply of Bitcoin is being slashed at the exact same moment that demand is exploding like never before. It's a classic supply shock meeting a demand shock. The daily issuance of new Bitcoin has dropped from around 900 to 450. Meanwhile, the ETF inflows on some days were buying up 10 times that amount. This imbalance is creating a massive supply squeeze. The coins are simply not there to meet the new demand. And this fundamental tension is what will drive the price upwards in a way we've never seen before. Past halvings created bull runs on their own. This time, it's like pouring rocket fuel on an already roaring fire. Now, let's zoom out and look at the bigger picture of the global economy. Things are interesting, to say the least. Governments around the world printed unprecedented amounts of money over the last few years. We're all feeling the effects of that through inflation. Your savings are losing value, and the cost of everything is going up. In this environment, people and even countries are desperately looking for a safe haven, an asset that can't be devalued by a government printing press. And what is Bitcoin? It's a mathematically secure, decentralized asset with a fixed supply of 21 million. No one can create more. This makes it an incredibly attractive alternative to traditional currencies. It's digital gold. As trust in government-issued money wavers, the appeal of a neutral global asset like Bitcoin only grows stronger. We're also seeing a trend of de-dollarization, where countries are looking for alternatives to the US dollar for international trade and reserves. While this is a slow process, it signals a major shift in the global financial order. Bitcoin stands to be a major beneficiary of this chaos, acting as a global, neutral settlement layer and store of value that isn't controlled by any single nation. This isn't just about protecting your wealth. It's about opting into a new, more transparent financial system. Another piece of the puzzle is the evolution of the Bitcoin network itself. For a long time, the main criticism was, you can't do anything with it besides hold it. Well, that's changing, and fast. The introduction of things like ordinals and the development of Layer 2 solutions like the Lightning Network are unlocking new functionalities. Ordinals, which are like NFTs on Bitcoin, have brought a new wave of users, developers, and transaction fees to the network, proving that Bitcoin can be more than just digital gold. The Lightning Network is making Bitcoin transactions faster and cheaper, making it viable for everyday payments. Imagine buying your coffee with Bitcoin instantly and for a fraction of a cent. That's the future that's being built right now. These developments are transforming Bitcoin from a passive store of value into an active, programmable financial layer. This adds a whole new dimension to its value proposition. It's no longer just a digital rock. It's the foundation for a new decentralized internet of value. This utility-driven growth is sticky. It brings in real users and real economic activity, creating a more robust and valuable network for everyone. So, let's put it all together. You have the institutional floodgates opened by the ETFs, creating relentless long-term buying pressure. You have the supply of new Bitcoin being drastically cut by the halving, creating a historic supply squeeze. You have a shaky global macroeconomic environment that is pushing people towards hard assets and alternatives to fiat currency. And on top of all that, you have the Bitcoin network itself evolving, adding new layers of utility and attracting a new generation of builders and users. Each one of these factors on its own would be enough to trigger a significant price increase. But we have all four hitting at the same time. This is a perfect storm. It's a confluence of catalysts that we have never seen before in Bitcoin's history. This is why the $150,000 price target for 2026 is no longer the ceiling. It's the floor. It's the base case scenario when you just do the math on the supply and demand dynamics. The potential upside from here is truly staggering, and we could be looking at figures that make 150K seem conservative in hindsight. Now, I have to say this. This is not financial advice. The crypto market is volatile, and you should always do your own research and understand the risks. Never invest more than you're willing to lose. But the trends we've discussed today are powerful and undeniable. We're witnessing a fundamental repricing of a global asset in real time. The journey will have its ups and downs for sure. There will be volatility. But the underlying long-term trajectory is becoming clearer every day. The combination of institutional adoption, a programmed supply shock, macroeconomic tailwinds, and growing network utility is creating an unprecedented setup for Bitcoin. So, when you see those headlines about Bitcoin hitting 150K, don't dismiss it as just more crypto hype. Understand the powerful forces at play behind that number. We're at a pivotal moment in financial history, and it's going to be an incredible ride to watch. Thanks for sticking with me through this deep dive. If you found this useful, make sure to like and subscribe for more content like this. Let me know your thoughts in the comments below. See you in the next one.